All right, what's happening, everybody? Happy Monday. Welcome to Ask an Analyst here, Market Traders Institute. We're going to talk about stocks, Forex, cryptos, joined by Tyson Clayton. Hey, Tyson. Happy Monday, man.
Yeah, happy Monday, Chris. It's good to be here. It's been a few weeks, been a while. I'm actually buzzing in from cloudy. Where's the sun? Florida.
Oh, I was going to say, where's it's been a great journey of Tyson Clayton the last couple of weeks. So you're
It
in the office, right? You're in the headquarters.
I'm in the office. Yep. Wife and I are here. It's been hectic. I wish I could say it's been a vacation. It has not been a vacation to this point.
Yeah.
But that's all right.
Yeah.
No, it's good to be back. It's good to be on. We got a lot to talk about. I actually, I want the theme today to be kind of, I think there's some oil plays that we can talk about.
Maybe. Okay. Let's see. You want to take a look at, what do you want to look at? You want to look at U.S. oil? You got some stocks you're interested in?
I think let's look at oil first.
Okay.
And then once we look at oil, we can kind of then, get an idea of what is correlated to oil. Like, what is our, if we get a thesis on what we think oil is going to do, then, if we don't want to trade oil futures, what are some currencies we can? So the cool thing about oil is there's correlations. So we can either trade oil futures, we can trade equities that are obviously correlated to oil, or even currencies that are correlated oftentimes to the price of oil. And this is it's an interesting play right now, Chris, because what I see is give me a second here. I see de-extensions being hit all over the place.
Yes.
I see us sitting at a pretty key high. Now we are starting to break above, right? Mm-hmm. But it doesn't necessarily really shock me all that much. We're going above because, and this is pretty far back, but if you go back to, you don't need to do this, but back to 2018, there was some pretty aggressive supply that was put in right around this 70 to 72 level. So it wouldn't shock me if we don't go and tag that 70 level, 71, 72 level. But I got to tell you, unless things have changed, Chris, I don't think they have, but markets move in waves still, right?
Yep. So we've been told.
Yeah. So, I mean, it's the interesting thing about the oil chart is, and this isn't like that surprising, but it is interesting that it all lines up. You've got oil hitting de-extensions at supply level. You've got the CAD yen. You've got the pound CAD at a decent buy level. You've got the dollar CAD at a decent buy level. You got a lot of CAD pairs looking for rallies against the CAD. CAD's very correlated to the oil. You also have the XLE, which in equities on demand is one of our bear call spreads that is sitting above our, right at above that power play zone. We're sitting at a really, really interesting key technical level, Chris, with the 2000 kind of the before the big capitulation COVID sell-off in the XLE. We filled a gap right around this $53 level. But so everything's kind of lining up pretty interesting with, kind of a sell-off setting up, I think, in oil. What do you think?
I mean, I agree. I mean, what's been interesting is just noticing the correlations in currencies. And for the last probably month, it's like, well, I see oil going back to the mid to low 50s. I see the CAD lining up for what's been a very strong basket, has now set up to look for some weakness. Now, we did have, if we go to the calendar last week, we had Friday's non-farm payroll and CAD employment. And what's interesting is looking at the currency strength for the day. I talked about this morning in my session. The CAD was one of the weaker currency pairs of the morning. So going into 9 o'clock, 9:30, the market's clawed back a little bit, dollar slightly softer. But last week, Friday, the CAD and the dollar both on missed employment news were on the softer side. Going into oil, I think that it's going to be a combination of both, right? I mean, we technically look for CAD weakness and what's going to help be the kind of the fuel and the driving factor behind it. Oil could certainly help fuel, no pun intended, fuel the CAD weakness by dropping. So if oil, we go back to that oil chart here, if oil starts to fall, and I think what's going to be really critical to watch here is this recent structure. I think that all this is, Tyson, here is now we could drift a little bit higher. We had those 2018 highs back around $75, but I tend to look at something like this. The backside of this trend line And I'm noticing that where we're currently sitting with price just sneaking above these recent highs, that you can see divergence where price makes a new high, but momentum does not. Price makes a new high, but we have hidden bearish divergence. We have an overbought condition. And so I could see some indecision over today and the next couple of days, starting to round this top out and then selling back down into the low 60s, perhaps actually creating a bit more of a topping pattern where let's say the oil slides back down to challenge 62. Well, it makes sense to me if the market does move in waves that we start to see a corrective move back down into these levels, which would be about the mid 50s. So I'm looking for oil to slide, and I'm curious, do we end up going back to these 2018 highs and we just see, we've heard this, the melt up. Is it melt up on oil? Is it melt up on real estate? Is it melt up in the markets? It's like that's what we're seeing right now. I just put out a video for my Pulver report on my YouTube channel, and I just put is this the top? Because this is what euphoria feels like, Tyson. This is what irrational exuberance feels like. And I'm not saying that this is absolutely the top and I'm selling. I'm just saying we have all of the signs and evidence of, I think a lot of good stuff is priced in. I think that now the next real move in the market's going to have to be a reality. We have the reality to keep pushing higher, keep pumping higher? And now that we're in the first week of June and it's summer trading, I don't know how much, fuel is left in this bull market at this time. So it's going to be interesting how it plays out. Last year, we had a big sell-off in June, about 8% in the S&P. We talked this morning on Equities on Demand looking for possibly, let me get your thoughts on this. You had said earlier, you think that there's another pump going back into growth stocks. Now,
yeah, it's really interesting. I think there's going to be potentially a rotation. Now, yeah, it's a little bit of a risky play, but I got a way that we could maybe kind of dampen, in fact, maybe even almost eliminate a lot of the risk on this play.
Okay.
So money's got to flow someplace, right? And so the growth and the value kind of flow. They can both go up together, but one is typically overweighted over others, depending on where we're at in the cycle. Growth was dramatically outperformed the market from the COVID lows to about November, December, because that was when, growth got absolutely destroyed down. They knew, the world finally realized that this isn't going to be forever. And those growth stocks started to say, okay, man, they're going to be amazing growth going forward. So that really outperformed until about December. And then from December, value plays have been outperforming. And I'm not convinced yet. I think that money has to go someplace. So it's not, I don't think the sellers want to just sell.
Yep. I agree.
They want to sell. And they would sell and they would go into like a bond or go into cash. I don't think any big investors out there really trust. They don't love that they're getting 1.6, 1.7 yields on a 10-year rate. And they don't necessarily trust staying in cash, but they also know that they've got a lot of juice. The value plays have paid off pretty well. So therefore I see potentially them taking profits in their value positions and going into growth. Now, here's the deal. Obviously, I don't know. That's kind of, it would be a little weird to see an overall market sell-off and growth substantially outperform. That's a weird scenario.
Right.
So how do we combine the two where if the market doesn't sell off, we can make money on our growth stocks. But if the market does sell off, we can still make money. Well, let's do this. Let's do a pairs trade.
Okay.
What if we looked, and I haven't priced this out, but what if this is something that people could think about? What if we look to structure a bullish position in the IWM, which is the Russell 2000, which is more oriented to growth,
right?
And a bearish position or puts in something like the diamonds, the Dow stocks, which is more the value oriented stocks. So again, do kind of that straddle. So what you're doing, Chris, it's interesting because you're doing kind of a straddle, but you're straddling the market, but in two different scenarios. You're straddling the market in, if we continue to rally, I expect growth to substantially outperform. If we sell off, they're all going to sell off. And I think the sell-off is going to be even worse in the diamonds to start with because there's going to be a lot more money locking in those profits in the value stock. So I'd like to go short the diamonds and long the IWM.
Okay. No, I think that's fair. Now, do you think the IWM has enough momentum to break these highs from March? Do you think we're looking at more range trading, or do you think the IWM is going to actually penetrate and break those highs?
Yeah, so I would say so that's the risk of just going all in the IWM, right? That's the risk of saying, oh man, growth is going to substantially outperform. I'm not that confident in it. Right. But if you look at that chart though, You can see that the IWM, what happened when the IWM is we created some massive supply sitting back right at the top of that channel.
Mm-hmm.
And then we came back up near that level, and we actually ate through a lot of those. Whoever wanted to sell on that level, that second test, that bounce up, I think we've eaten through some of those sellers. So here's the deal. We may still have a bunch of people who take profits and sell at that level. But that right there, Chris, we may be eating through that supply. And once we're done with the sellers, that leaves us with nothing but buyers.
Right.
So we could base around this level for a little bit. And what I do think is and we're structured this way in our Master Blaster trades, I think we're going to get a fairly big size break in either direction. It's going to be a fairly aggressive move up because the market, let's say the overall market continues to rally, growth stocks outperform, like I said, or the market takes a digger and value stocks underperform. And so does the IWM goes down also. But I think this level here, we're going to get movement.
Yeah.
If I had to bet, I bet on the upside move,
Yeah.
but I'm not confident enough to say we're for sure going to go up. So I'd rather pair it with something like short DIA.
Yeah, I like that. And also looking at DIA, let's take a look at this right here. I mean, again, just noticing the major levels. That's our high from May, and then we have our recent sell-off here. Again, we might see this sideways movement, this recent play on the DIA, just pretty indecisive here. 1, 2, 3, 4. We have 5 days, 5 daily candles worth of indecision. Now, does it get worse? Do we actually start to see the DIA breaking the structure and heading back down to those, mid-May lows? Possibly, very possibly. And so percentage-wise, let me actually get a percentage movement on that, Tyson. So if we sell back off on the diamonds, back down to those May lows, let's say we do that from current price. If we go from current price back down to those lows, we're looking at around about a 3%, 3.33% sell-off on the diamonds just to get back to that level. I also think that it would be a really critical test, right? If we end up testing, that trend line, for example, you can see these really strong support levels that go back into the low of February this year, the low in March of this year. And this is when you and I were having a lot of conversations around how do we think the market finds a way to stretch another 8, 10, 12%. It's going to be doing exactly what you see here, which is the market goes up, a couple of percent, pulls back, goes up a few more percent, pulls back, goes up a few more percent, pulls back, goes up again. Now we had a pullback. So it really is like, I just keep looking at these technicals, man. It is a critical spot to see, can the bulls continue to outperform or keep this market stretched? Or do we start to see, this is where we had kind of our yearly trend, everything stays the same, let the melt up continue. But the reality is it's summer trading. So maybe summer trading looks like this. Maybe summer trading is this. And then we come into this, really critical post-summer breakout. What does August look like? What does September look like when unemployment benefits in the U.S. expire? If there's no new program in place to extend benefits further for the U.S., I think that is where, kind of if I'm going to put a vertical line on what time is going to be really critical, it's like September into October. What does that reality look like for the stock market? So I could see us going sideways on the diamonds. I could see us going sideways even on the IWM.
So think about this, Chris.
Yeah.
So the diamonds are in very similar to the SPY. For it to go sideways, for it to be trading near a top, you got to think about this. There are some sectors that are trading at all-time highs.
Yep.
Or highs.
Yep.
There are some sectors that have paired that off. So net, there are more sectors are trading at highs than recent lows. But what if it's going to go into a range, what's going to happen is those sitting at highs are going to sell off a little bit.
Correct.
Those sitting at lows are going to come back, and they're going to go back. I call that going home, right?
Yep.
They're going to kind of pair back to each other.
Yep.
So taking this whole thesis of potential growth outperforming, but I'm not quite sure if we get a massive sell-off, think it's going to be more value stocks. Growth might kind of hold up a little bit better. If we get a big breakout, I think growth is going to outperform. So essentially my idea is growth is going to outperform. What if we went short consumer staples and long consumer discretionary? And technically speaking, Chris,
long staples,
discretionary is sitting at a decent low. It's not real low, but a decent low. And staples are sitting at a high, which means we could win on both of those trades as the market consolidates.
Yep. So you're saying go short staples.
Yep. So short
and then long discretionary. Yeah.
So what it would be is short the XLP and long the XLY.
Yep. XLY. That's what I was looking for, the tickers there. XLY.
Yep.
I like
so
that
check
too.
these out technically
Yep.
too. Technically, I think this is a nice looking trade too, because what happens technically, guys, is we could see the XLP selling off, the XLY rallying, not a big rally, but that kind of creates that choppiness within the stock, within the market. It stays within those ranges, but we, instead of just trading in that range, we could actually win on both trades.
Absolutely. And and just take a look at this. Take a look at this level right here. If we have any type of correction back down in XLP, man, it's like you would think it's very simple to get back to this level where we were just formed this recent low. So drifting higher. It comes back into that level around $69. Or our past resistance right around $67. From 71 down to 67. That's a $4 move. Let's take a look at. I mean, that's a good size correction on that. So $4, and we're trading at 71.20. So we're looking at about a 5.5% correction. I think that's totally within the wheelhouse of XLP dropping. And again, sideways movement, even if it does nothing. If we just go sideways, I would say that this favors a little bit of a near-term top to come into play.
And that's why I like it, because the stock market could go sideways and staples underperform.
Yep, agree.
And so what I would look for on this one here, and this is something we'll maybe talk about more in Equities on Demand tomorrow, but what I would look for is I would look to go out probably 4 or 5 months, Chris, and probably spread this. Look to buy maybe a little bit of an in-the-money put, and then sell around that 65 level put and try to collect a little bit of premium. So just guessing, I don't know the exact numbers, but I'd maybe look to do a 75 by 65 bull put, or I'm sorry, bear put spread, potentially out 4 or 5 months, but I don't have the details yet. But I like the trade, but it's probably a 75 by 65 bear put spread.
So you would be long the 75 then, yeah?
Long the 75 put,
long the 79,
short the 65 to bring in some more premium,
Yep.
And then go out probably 4 or 5 months. I like that trade. Should be able to give you some decent profit. If it hits that 65 in the next 4 or 5 months, that should be a pretty nice profit.
Nice.
And even if it doesn't, if we just drift down to 70 or so, in fact, I could price that out right now. Let me see your XLP. Let me price this out. I'm going to go out to.
You think like going out through October, like through October?
September. Let me see.
July,
I'm going to see the
August,
December
September,
ones.
October.
Let me see what the December. So if I bought the 75, so we got to remember the 75s already have about $4 of real value.
Correct.
Right.
Yep.
So that's another thing people need to understand. Like this, oh man, that sounds like an expensive trade. Well, you got $4 of real value.
Right.
So you could do this trade, Chris, for probably about $4.45.
Okay.
Which again, I don't mind, considering the fact that you've got almost that in real value, right? And so you're risking in this trade, you'd be risking about $4 or $4.50 to make about $4.50 or so. But again, I'm not confident enough just to take that bet.
Right.
But I would pair that with, so I would like that trade. I'd pair that with an XLY long bull call spread.
I like it. Let's take a look at XLY. So this one, XLY, and then looking for.
And you see how this one's a little bit low. This one's already kind of paired off just a little bit. It's sitting at somewhat of a level of support, better support. Again, I'm not super bullish on it.
Right.
But if the market falls, they're all going to fall. XLP will make money. If the market rallies, I see discretionaries, because there's more growth stocks in discretionaries outperforming.
Correct.
And so for this one, what I would look at is I'd probably look at the 165. So I'd go out to December again, and I'd look to buy the 165s. Maybe, you know what, I'd go to the 170s. This one's going to be a little bit more expensive. But
170, okay.
Yeah, I'd probably do the 170s out to December. Oh, I'm sorry. No, I take that back. Sorry, the 160s. Sorry.
Okay, so a little bit more space.
160s, and then I would sell. And this is the hard thing with the upside, because we're sitting near an all-time high. But I think to sell the, what is the
like the 180? We have highs over here like 180. I was thinking like maybe the 185.
Yeah. Let me see what the 185s are. What we can get that at. So the 185s. So that trade there, Chris, if you bought the 160s, which remember the 160s have $10 of real value in it, and you sell the 185s, you can get in that trade for about $12.15 right now.
Okay.
And you have about $15 worth of profit potential. So I actually like that trade. So that's how I would pair this. So essentially I would do The XLY December 160 calls by 185 calls, and I pay about $12.15 for those. And at the same time, pair that. Don't just do that one trade because I'm not that. Pair that with the XLP trade. And now all you're looking for, guys, and it's listed, all you're looking for is the market to move. If we break higher, you're looking for growth stocks, discretionary stocks to do better. If we break lower, I think value stocks are going to underperform. Stuff like the staples is going to end up coming down a little bit more aggressive. Those two individually, I don't love the trades. Together, I like the trades a lot, Chris.
Yeah. No, that's great. And this would be is it December 31st? Is that the expiration?
Yeah, December 17th.
17th. Okay, got it.
Yep.
Got it. Cool. I like that.
And actually, Chris, this is probably a trade that we should talk about. We'll talk about tomorrow.
I was going to say we should bring this into class tomorrow. I'm super interested in this trade. I think that's and again, one that we can set up. We're pretty certain we're getting movement. That's the whole point. And it's essentially letting our winner run compared to our potential.
The thing I like about this one too, Chris, is I think the movements I think we could see movement in the summer.
Yes.
But even if we don't, we still have until mid-December. So we're going to get that October, November movement that we typically, that Santa Claus rally or the sell-off that we typically.
Yeah, I know. I'm really I'm wrapping my head around the seasonality this year. It's like we had an interesting start of the year. It's like the melt up, the drift was continuing, March and April. And a lot of this we see in currencies. We didn't really have this like bold trend in April and May. We had a pretty quiet April and May. The dollar just kind of retested some levels. The CAD was pretty strong there for a little bit. Now we're starting to see the corners change. I mean, Aussie US dollar has been sideways for the last month or two. New Zealand dollar's been sideways. Dollar CAD is bottoming out around that 1.20 handle. Dollar Swiss, I like, range bound all the way back up to like 93, 94. Euro dollar's range bound from 120 all the way to 123 and change. Pound dollar sitting at a high. It's like, I still go back to, let's talk coins for a second, your currencies. Going to the dollar index. I still like this setup, man. I mean, I don't know if it's just, if I'm like the crazy man that's like, I'm long the dollar, but it's like, technically speaking, this checks a lot of boxes for me to be long the dollar. And I say this, that, if traders are going on this little journey with me, I know that we're going back to 2018 lows and we hit them. We hit those 2018 lows. Now the question is this enough to be a crown pattern that's going to allow the dollar to get stronger and actually have and hold this higher low? Or will this dollar continue to go sideways, continue to work its way back down into massive ranges, and we still see a bottoming formation at the 2018 levels, and we just range back up? What I don't necessarily see, Tyson, is I don't see the dollar going to crazy lows without coming back in a very aggressive fashion.
The one thing I look at this is like, I don't ever have to make a choice right on a traded cash. Just sitting on the sidelines, but there's no way I'd be a seller.
Right. If I had
eliminate
no
that,
bias,
then it's like, okay, if I'm not going to sell, then do I do nothing? Well, I think there's an opportunity. And I think if there is an opportunity, the opportunity is for a buy. And so I'm with you, Chris. I like the dollar CAD. I like short the Aussie dollar, like I've been talking about for what seems to be
a long time. Yeah, a long time.
But and I tell you, the longer it sits at this level and bases like it is, the less I like it. But I would, if I had to pick one of these, of either the Aussie dollar or the dollar CAD, I'd rather be in the dollar CAD.
Yeah.
Because that goes into the oil play too.
Correct. Yep. And so, and this is all I'm really looking for on CAD. It's like, okay, so we have a pretty solid trend line here that I could probably take back even further. A more aggressive trend line from this BOC high, aggressively down, which we're clearly breaking. But I'm just looking to see where's the evidence. Like right now, this week is an example. The month of June just started. We still have we have a yearly pivot at like 3,300. We have a monthly pivot at 2,150. So we're not there yet. Like for the month of June, we still have an available target. And what I'm looking for is if price, and here's what I think. I think with this level right here and this level right here, if we can get above this little choppiness on the dollar CAD, I think that we can quickly go to, let's say, 2,350 to 2,400, like very quickly. And from there, I could see us flirting with this trend line, possibly a shallow pullback and then a run up into 26. Now from there, it's like, what happens? Do we end up, pulling back again to build a C? Maybe it's a crown formation or head and shoulders. This could be the right tip. and then we have to have this bigger move coming later. But for right now, Tyson, I'm really long and looking to get aggressively longer if we can get price to close. And this is what's really critical if anybody's checking this out price-wise. We have to close above 2150. If we close above 2150, I think this looks fantastic for a run into 2350 to 24. I'm going to be adding trades pretty aggressively. I will probably have 3 or 4 or 5. I guess there'll be scalps because I'll be looking at like daily pivots as an add-on, maybe a counter trend line break. I'll probably look at using something like momentum breakout, max, or right trader just to get some dynamic, support and confirmation to see what I want to trade. But I think we can quickly head back to 2350, 2400. And from there, I'm trying to make this as profitable as possible and hopefully see this thing get back to 26.
So what are your thoughts on, so I agree 100%. Mm-hmm. What are your thoughts? And I think the move could be fairly quickly. So with that being said, what are your thoughts on trading around a core position? So let's say I'm a trader that I want to go long. Mm-hmm. Let's say I want to trade 2 contracts, whether it's micros, minis, standards, whatever.
Okay.
I buy 2, I keep 1 up to an ultimate target of let's say 26. That's my overall longer term target. But I trade the other one. I have a bullish bias the entire time, but I scalp in and out of the other one. So I'm gonna capture a decent chunk of the move and maybe capture even more with the pair that, or with the contract that I'm scalping. What are your thoughts on that?
I like that a lot. I'm gonna say 121.50. And so this is what I would do. Let's just keep it really simple and say that we're going to do 2 contracts. So 2 micros, 2 minis, 2 standards, whatever. If we see price breaking above, here's what I would do, Tyson. This is going to be my trade here. If we break above 2150, I'm going to see a daily candle. That's the first thing. A daily candle closing above looks great. If we get above 2150, then I'm looking for, I'm going to get my drawing tool here. If we break above 2150, I want to see a daily candle closing above that. So a close above 2150. What I would do is this. I would have a small order here, okay? And that's going to be my one trade that gets me into this 20, we'll just say 26. We'll try to go back to these highs right here, okay? That's going to be my ultimate target. Now, from there, I'm going to look at a system like Right Trader. I'm going to look at some scalping systems. I'm going to look at something with a directionally bullish bias and try to get another trade in and scalp this thing for maybe 30 to 50 pips. Get back in, scalp it for another 30 to 50 pips. Look for daily trading ranges to scalp this thing.
But you'll keep that one core position on.
Yes. Awesome. So keep the one position on and take profit at 26. And then the other position, you're in, you're out. It's 30 to 50 pips. You're not building too big of a position. You're agile with that. You're looking to get back in and buy some dips. And I think when it all adds up, Tyson, you could probably have a trade that let's say we get like a fill at 22. I'll just say it's not a great fill, but from 22 to 26, okay, we're going to look at 400 pips. Okay, we're looking at 400 pips. Now, if we have from 2200 to 2600 of movement and we have pullbacks, every couple of days, if we push up 50, 60 pips and pull back, if we push up 100 pips and pull back, we could probably match that or exceed that with that second position that we keep looking to get in and out of. So I think realistically, we could probably look for total, probably 800 to 1,000 pips worth of total pips and profit when it's all said and done. And the
nice thing about trading it like this is that you're not, if the move does happen, like let's say it happens super aggressively, like the Fed comes out and says, hey, wow, inflation's crazy. We just woke up and, lumber prices are $1,300. Wow, we didn't realize that. And they say and the dollar just spikes. Mm-hmm. Well, at least you're going to catch that move. You're not going to be on the sidelines looking for that next low price and then watch it rally away from you, because that's frustrating when you look for a trade. You're waiting for that next low price. You're confident where it's going, but it doesn't quite get down your buy zone, and then you miss the move. So that doing it like this allows you not to miss that move.
I agree. I think that's great. I think that's an awesome trade. Honestly, technically speaking, this is one of my favorites right now, dollar CAD. And I know that and again, let's say dollar directional bias aside, if you looked at this chart for the first time, if this is the first time you're looking at dollar CAD, it's hard to say I'm going to sell this.
Yeah, for sure.
And look, I'll go back here. I know that there are levels that we could break, this massive low back in 2015. I know there's levels to come back into, say, 117, maybe this level 113. I get it. I get it's there, but I just don't see that playing out. I think that it's going to test certainly, my patience, because I've been long on dollar CAD since like 123. But I just don't see us breaking with follow through. I could see us breaking, testing, maybe getting to 1950 or so, But I see like, again, that oil play is probably going to allow this to snap and snap quickly. And from there, the question is just how long can I hang on to it to the upside? If we get to 26, I'll be happy. My break even's like 2,300 on $CAD right now. But man, I'd love to see this thing somehow get back to like 2,900, 3,000 again. But I think it's going to do something like this. Just really quickly, what I am looking for as far as the analysis, high to low. Look at how long this thing spent going sideways and still having a slight bullish channel. And then we went down again, and then look how long it spent doing this. After we have these big trends, it will take months for this $CAD to kind of correct. And so even after this ridiculous move, and we have 5 waves completed, we're looking for Fibonacci pullbacks, we're looking for pockets, we're looking for inefficiencies, all this stuff. I could see this being either really fast to start things off, or then actually starting to be very methodical, just like this, like all these choppy ranges where it's like it goes up 300 pips, pulls back 250, goes up another 300 pips, pulls back 250, and it might take the next year on the $CAD to actually hit 1.30. But
I agree.
It just, again, Forex right now for the last, probably 2-3 months, we've seen low volatility. If anybody's checking those daily trading ranges, we even have pound pairs, Tyson. We only have like 1 or 2 currencies in the entire majors and crosses that are over 100 pips a day. Everything else is under 100. Everything. And most of them are like 40 to 60. So it's like we're talking very, very little volatility, very low volatility in Forex. Now, we know that changes. We know we can have, some excitement coming soon, but I don't really think that's going to happen until probably August, September. I think the market could slide into higher volatility, coming out of the summer trading. But again, be ready for anything. Always be ready. Always be ready. Trade size and equity management is the most important thing. But man, I just remain as patient as I can be for trades like this. And, I told this to traders the last couple of weeks. If we're right on this, if this does in fact go to 2,600, I want to be as profitable as possible getting to 2,600 and not have this thing like I need it to go to 1.3. I need it to go to 1.33 to get, it's like I want to get paid on this as quickly as possible and manage with a lot of profit. So that's what I'm waiting for, is like I'm waiting for the coast to clear. Give me some dollar confirmation, give me some dollar strength, give me some oil confirmation, give me some CAD weakness, and I'll step on the gas in this trade and look for as much profit as I can make.
Yep. I'm on the same page, Chris. I love it.
So anything else? I mean, so a couple of, top currency pairs, crypto wise, I think you and I are on the same page. Just set some chart alarms and wait. I have chart alarms set, highs and lows, intermediate highs and lows. I'm looking for cryptos to come back down to recent lows. I hope that they do. I think mining costs aren't that far away from Bitcoin. We're at 35.7 right now. I would love to see this retest those lows, 30,000 or less. And mining costs right now are what, 25, 24, 25?
Yep.
So I'm hoping that we have another flush down, and that's what I'll wait for. And part of it is I'm really happy I protected when I did. I'm sitting in cash on probably 95% of my crypto profits, and I'm just looking to get back in. I dabbled back into Litecoin, got back into Ethereum, but I'm going to wait. GBTC, Bitcoin, if we hit that 25K, 20,000, now we're talking good upside potential. Plus, if this goes through 60K, and gets up to 100K, you're going to be happy you bought this at $20,000 or $25,000. Would I be upset if I don't buy it right now at 35,000 and it runs up? Yeah, a little bit, but I still have positions from $4,000 on Bitcoin that I'm still holding. I'm just looking for more areas to add, and so I'm not in a hurry on these. And maybe I'm fortunate for my timing of when I got it in 2019. But nevertheless, I think that we can still come back and retest these lows. The correlation I draw this to is what the markets did last year. You and I talked about so many stocks in March and April of last year in these very sessions where price ended up creating these amazing double bottoms.
Yep.
Look at these like just insane, fast capitulation type moves, like all one-sided. What does price do? We have this, bottom is found, price rallies up, comes all the way back down, tests the low. That's where you buy it.
Exactly.
And so if that happened on cryptos, literally look at all those lows, and if we come back down to those lows, you buy it. And if it starts to go a little bit lower, you wait for a trend line. And so it's like test 1 on the bottom and test 2 on confirmation once we have some type of better structure, some type of trend line break. But that's my long-term outlook on cryptos. And then from there, my target is literally the 2021 highs. Anything higher than that is worth protecting. Anything lower than that, I just sit on my hands.
Yep. No, I agree. I think, and this is my advice for crypto is find the level that you want to buy at. 25, I think, is a great level.
Yep.
And set a limit order in to buy there, because if the move happens, the moves happen fast and quick.
Sure.
I mean, like they're like a day long, and sometimes they're like 15 minutes long. So you want to be prepared to capture some of those when you can. And then if you buy, let's say you set it at 30, and you buy at 30, and you look and it's down to 22. Either you got to be okay with it. You got to know that in something like this that could happen. So you got to be okay with that, and you got to be long term, or don't buy it. Like if you're like, oh, if I buy it 30,000, it goes down to 18,000, Tyson, I will be freaking out. I'll be losing sleep. Then don't buy Bitcoin.
Right.
That's the asset class.
Yep. And so just if I'm going to have this, stretch out a little bit further, and again, it might be, I know that traders were excited back in this time, right? Like who was excited back in, 2019, 2020, when we finally broke this trend line? When we finally broke this trend line right there, right? But it was slow going. It stalled, then started. It's like you had to look at the bigger picture. Was this just a massive head and shoulders pattern? Kind of. That's all the whole thing was, and we broke, and we just rallied like crazy. So I think that the evidence will be there. I don't know how long this is going to take. It doesn't matter. We're just going to keep looking. But all I know is that right now, I'm not buying any cryptos new. I'm not buying any cryptos fresh. I'm going to wait and see if those lows are retested, and then start cost averaging in or having some levels where I'm really, really excited to own it at those levels, and then target the 2021 highs. Not that bad of a play.
Yep.
So
I like it.
Anything else for today, man? I think we can probably wrap it up. We've talked some cryptos. We talked some stocks. Great play. I'm looking forward to talking about that in class tomorrow for Equities on Demand, looking out, on XLP and XLY. It's a good play. And also same thing on the IWM and the diamonds. I mean, and again,
it's a similar play.
Neutral.
I actually like the XLP, XLY play a little bit better, but they're very kind of similar in their structure.
Yeah, for sure. So cool beans. All right, everybody, thanks for tuning in today. Make sure you take a moment, take 1 second out of your day and smash that thumbs up button for us. We appreciate that. That goes a long ways to help us get this video seen by other traders that are out there looking for good information and great education and free education, which Tyson and I offer all the time in these sessions.
Somebody already put a thumbs down. It must have been all my interrupting. Sorry about that.
Well, no. Whatever. Hey, I don't know who it is. They can come back and.
I really don't care. People, you do what you
they
guys
can
got.
troll us if they want to, but they'll realize that this is as good as it gets as far as real authentic education. You're going to get it here. Yeah. So that'll do it for today. Again, you have a chance to join Tyson and myself in our respective trading rooms. We have an Equities on Demand class. We run stocks and options Monday through Friday. So if you're interested, come and check those out. Traders are happy, learning a ton. We're seeing consistent profits. We're trading right now, Tyson, neutral. We don't really care if the market goes up or down or sideways. We have positions to cater to that, and I think it's been great. So we love it. More students coming in. It's a lot to learn, but once you get through that 1 or 2 week learning curve, again, get the process with us, see how the strategies work. There's just so much transparency and real trading, and traders can take this from now until forever. And it's actually really easy to say that I know how to trade stocks and options way better just after a short time with us, and I think that's really apparent when we get feedback from all our students. So that's it. That'll do it for this week, everybody. We'll see you in Equities on Demand, see you in the trading rooms, and we'll see you next week here for AAA. Take care. Bye bye.